Hi, my name is Erica Vautier, and I'm the Director of Marketing for Windermere Exclusive Properties. Today, I'm here with Kevin Kueneke, a Senior Loan Consultant for CW Mortgage. Kevin is here to help us better understand what is going on in the mortgage industry. I'm going to ask him a couple questions, and if you come up with any of your own, feel free to leave them as a comment or send them to us in an email. Kevin, we got some big news over the weekend. What was it?
Basically, the biggest news is that Fannie Mae and Freddie Mac are being bailed out by the government. A lot of people think, well, so what? What does that mean? Well, Fannie Mae and Freddie Mac are two large mortgage companies that basically service or hold almost half of the nation's mortgage loans, roughly $5 trillion worth of mortgage loans. The government felt that these two entities were in trouble, so they decided to jump in and add some money that hopefully will help save the mortgage industry.
And what are the effects that this bailout is going to have?
Well, the most immediate effect that we've seen so far is that mortgage rates have dropped roughly 0.5%, and it was basically overnight. From Friday, September 5th to Monday, September 8th, we saw conforming interest rates drop almost 0.5%, which is a pretty dramatic decrease, the biggest decrease I've seen in that short period of time in my 15 years of lending.
Now, what type of effect will a lower mortgage rate have on people's buying power?
Well, bottom line is a lower mortgage rate will help more people qualify for loans or qualify for a higher mortgage than what they could qualify for before.
So Kevin, how will these lower rates affect buying power?
Well, it's an immediate effect in the sense that with a lower rate, someone can automatically qualify for more money. Or in the other sense, someone can qualify for the same amount of money, but their payments will be lower. So this increases confidence for buyers.
So this is good news for San Diego then?
Absolutely. This is absolutely good news for San Diego. Right now, prices are nice and low. There's inventory. Buyers have many houses to choose from, and their purchasing power was increased basically overnight. So right now is the time to buy.
Great. Now, what effect will this bailout have on the housing industry and the mortgage industry as a whole?
Well, right now it's too late. It's too early to tell the long-term effects. We are obviously going to see a spike in mortgage applications here in the next several days because of the lower interest rates. We're going to see more refinances come up as many people did not make sense for in recent times. But with these lower rates, you can see a lot of people jumping on it and taking advantage of it.
Kevin, how will the lower rates affect the housing market and the mortgage industry?
Well, I think we've already seen the initial effects in the sense that there are more loans being written. With these lower rates, people are coming out of the woodworks, not just to buy homes, but to refinance as well, because they realize they can get more bang for their buck. Or it makes sense for them to finally get out of that 5-year adjustable that they had, that they may only had 1 or 2 years left to go.
Any final advice for San Diegans who are interested either in a new loan or possibly refinancing an existing loan?
Absolutely. Now's the time to jump off the fence. Find out how much you can qualify for. Maybe more than you think, or you might be pleased to know that the amount that you already had in your mind, the payments will be significantly lower. We'd be more than happy to help anybody with any questions.
Kevin, thank you so much for coming here today and answering these questions for us. We are so thankful to have CW Mortgage and Kevin here as our in-house mortgage and lending resource. If you guys have any questions, again, you can just leave them in a comment or in an email to us. Visit us anytime at Picture Perfect San Diego for real estate and mortgage news.